Hey everybody, it's Mike here again. I wanted to bring you guys an article that I today read in Bloomberg. Thought it was kind of fascinating. Renaissance Technology is also known as RenTech, kind of a darling of the hedge fund industry for quite many years. It was founded back in 1982 in, I believe it's Long Island, New York. Anyway, very early on, they were really big on quantitative analysis and also machine learning. So these guys were building up, the computer systems and the algorithms, etc., to try to game or predict or whatever the market, so they can make awesome returns. And their internal fund, the Medallion fund, for example, only can be used by internal employees and insiders. Generally makes 50% plus a year. It's ridiculous, making enormous amounts of money. But the story I wanted to bring to you today is the Renaissance has been hit with a $5 billion in redemptions since December 1st. That means since December 1st, their public funds have lost $5 billion of people pulling their money out because it has been losing somewhere in the neighborhood of 20% in 2020. They lost 20% of their investments in 2020 with their public fund. So it's kind of funny that at the same time, if we kind of go over to, here's another article on Bloomberg. I want to show you right here. Their other, Renaissance Medallion Fund has surged 76% in 2020, but the funds that open to outside and outsiders tanked, and it just kind of shows you how these hedge funds only care about themselves. And they'll screw their own their own investors if they're not a part of their little group of people. So basically everyone's like, listen, you lost 20-something%, close to 20%. The investment fund did, and yet your internal fund made 76%. What gives there? This is the same people managing it. It's the same computer systems. Apparently, if you read the articles, and I'll post them in the description down below. One of them actually is, basically looks back and predicts the market based upon the data that's been around, 60, 70, 80 years, whereas the Medallion Fund has a shorter term on it. So it's looking at different data to actively, do its trades, etc. But that's not going to make anyone feel good. They've just invested tremendous amounts of money, and you're like, wait a minute. You guys, the algorithm you use internally makes you a lot of money, but the one that you give us access to, we're losing money, hand over fist. And like I said, it just shows how these hedge funds will gladly screw their clientele over for themselves. And this is not the first time I've ever seen this in this type of industry. I'll call out real quick the Bitcoin industry. And I remember when I was involved in it back in 2012, 2013, 2014, back when the ASICs came out, everyone was so excited about buying that computer hardware. But a lot of people brought up, hey, why would they be selling you this hardware if they could take that hardware and make money on it themselves? And we saw with a lot of companies such as Butterfly Labs and some of the others that were selling these pre-orders that the reality is it makes more sense to build the technology and use it yourself because of the deflationary nature of Bitcoin. It's going up. Why would we sell you the hardware whenever we can use the hardware to make money, or basically make the money on the hardware and then sell it to you when it's not as profitable? And I see the same type of stuff going on here. Why would this hedge fund, who gets massive returns year over year, 50% plus, 76% in 2020, why would they let you in on their secret sauce? And one of the pieces of the article talks about, people got into that particular fund because they thought they were getting the secret sauce of Renaissance. They found out they weren't. And if you look back, their funds did terrible during the last recession. Just like any recession of any consequence, it does terrible. And their explanation is that, well, the system looks in the past. We hadn't seen anything like this before. And as such, it just didn't know how to react. But your Medallion fund did. Why didn't you adjust your knobs and tune it based upon the learnings back in 08, 07, 08, 09 and go, okay, let's listen here. Let's see if we can make this better. Because I didn't want to. Because they don't want that additional money affecting the profitability of their internal their internal fund. Because that internal fund, the more money you pump into them, the more it can make it difficult to make money. There's like and I don't know the number, the formula or anything, but there's a kind of a maximum amount of money that a fund can have when it's being successful before it, becomes a problem and it actually can cause it to be unsuccessful. And I can't remember the number. They've got whatever $1 billion, I think it's like 10 billion. I can't, someone correct me down below in the comments if you know it. It's like 10 or $20 billion max in that Medallion fund because they can't go any larger. Otherwise it would torpedo the fund. So if they've already got that figured out, what would make you think that getting into this public fund was somehow going to turn out well for you? It's not. They're not going to give you the secret sauce. That's not how it is. This is just a way for them to make some extra money on the side. This is them selling you their secondhand technology. This is a place for their interns to build algorithms that you're investing in. This isn't the magic stuff. This isn't the secret sauce. This is their leftovers, their throwaways. And it's just funny that people actually believed that they were actually going to make, really good returns with them, or it was going to work out well. Now, that being said, it did do well for, when the times were good or better. When the market's going up, it's great. When it's going down, it's terrible. Well, come on, people. Just about any person can figure that out and probably make some money that way. Hell, if Tesla's going up and up and up, buy Tesla. Just to make sure everyone understands, I'm not giving advice on investment here. I have no desire to tell you how to make any money. I don't know how to do it right. I play around with it. It's fun. It's interesting. I've made a little bit of money, but we're talking dollars and cents because I'm only putting dollars and cents in it just to say that I've done it. It's just, it's funny to see this, with everything else going on with Wall Street bets, the hedge funds crying because they lost all that money. You see Renaissance Technologies now with their own little private fund, and their public fund going south and people getting upset and pulling their money out. They should put their money. I would think that they should go do something else with it. I mean, this guy doesn't care. And of course, Jim Simmons is just on the board anymore. He's not in, day-to-day operation of the company, but it doesn't matter. They're not there for you. They're there for themselves. The company's really there for themselves. This is just a little extra cheese on the side. And you know what's funny is when this is all said and done, I'm sure people will pump more money in there. They'll just throw their money away. It'll look good for a few years, and then 5, 6, 7 years from now, they'll all lose it. What a mess. What a mess. It's funny what money will do to people. In any case, if you like this video, hit a thumbs up. If you didn't, thumbs it down. If you got any additional commentary, please let me know in the comments. I do read them. I do find them interesting. Some people have commented some stuff. Some people have commented against what I've said, and I'm totally for those. I want there to be a discourse. I have some more videos that I'll be working on over the next few days, but in any case, I hope all of you have a wonderful rest of your day, and if you're in the U.S., then I hope you enjoy the Super Bowl. Thanks. Bye.